Welcome to BHS Live. I'm your co-host, Todd Schoenberger from sunny downtown Buffalo, and I'm joined by my co-host in sunny Scottsdale, Arizona, and that's Tobin Smith. Tobin, say hi to the crowd.
Hey, did anything happen this week? I've been on vacation.
You know what? Lots of stuff has happened. I got to tell you, we had these great inflation readings. We didn't know what was going to happen this week. Markets have just been getting pounded. But today is the day of capitulation. Things are turning around, Toby. I feel really good about it. Sunny skies, coast to coast. Everybody's happy right now. And you got a Dow Jones Industrial Average. It's up close to 500 points right now. This is great news. But what do you make of it? Because we're still looking at another losing week.
Well, I mean, first off, in a bear market, and by the way, all of our indexes are in a bear market, meaning they're down 20%. When an index is down 20, or I mean a major index is down 20%, that means that those stock investors are pricing in a recession, and that's what they should be doing, because with the Fed raising rates, obviously, the only way that they're going to tamp down this inflation is with a major recession. So here's the difference. In a bear market, every once in a while, I was going to show you this paper. You won't be able to read it. This is a full page of the Wall Street Journal of all the new lows yesterday, right? That never happens. I've been following this for more years than you've been alive. And the only other time there ever was a full page on the Wall Street Journal of new lows was 2008, when the market dropped 50%. So when you're that oversold, meaning that everybody who has to sell has sold, a few buyers going in, major buyers, you just put a positive order in, it's going to raise stocks. And then it, sets off all the robots and the automatic and all that stuff. But it doesn't, but that's what bear markets do. You have your rip your face off, these short covering rallies. We actually went long, for instance, the worst mutual fund in the world, Cathie Wood's ARKK, we went long them this morning, and we made about 150% on these stock options because they're so oversold. Most of those stocks are down 80 to 85%. In the NASDAQ, in the NASDAQ, 70% of stocks are down more than 40%. I mean, that's, that's not capitulation. That's just we run out of sellers. Sorry.
Well, you're talking about short covering right now, Toby, and that's great, and that's really getting inside baseball for a lot of our viewers. But I have to tell you something. This is what I call a sucker's rally. Right now, you're going to see a lot of people coming back into the market thinking that we just hit the bottom. And I got news for you. We haven't even come close to hitting the bottom. You have way too many headwinds out there. You still have a Federal Reserve that still has its finger on the trigger, whether we're going to end up seeing hikes of 50 basis points or 75 basis points. You're going to see the U.S. economy come to a grinding halt. And it's going to happen in the next coming quarters. And as a result, you're going to see earnings go down, and that's the mother's milk of stocks. And therefore, you're going to have much more selling going forward.
Well, to stay with the mother's milk analogy, although, I don't know, we're having a formula shortage, so I'm not quite sure if I can pull this off.
Valid point.
The mother's milk of the stock market is the bond market. The bond market is the all-knowing inflation reader, and they're already pricing in the futures. We're pricing in 4% rates, my friend, not 3% rates. 3% rate is a complete dream because all of the stuff in the CPI this week that made any difference are all fixed. They're not variable. Rents and mortgages, they're not going down until you have, essentially a major recession. Energy prices with the de-Russification of the world are not going down anytime soon. Because of those, food prices are not going any down. We have an investment in a farming company, and they said it used to cost $800 to fill their tractors and diesel for the day. It costs $2,500 today. So add it all up. All that stuff is fixed. Inflation can't come down. It can only stay high, and that's going to freak people out.
You know what? We're going to address this issue again at the 4:15 show with the long form with buy, hold, sell. We got Jeffrey Hirsch coming on board with us. He's going to be an added trader to the panel. And I'm telling you, he's got a lot to say because he's got a lot of big time metrics that are going to back up exactly what you're saying. But let's switch topics. The other big news story, if you woke up late today, you really missed a whole lot of yo-yo and with Elon Musk and Twitter. And what better place to come out and say that you're going to actually put this on the back burner and it's going to be halted than for Elon to go to Twitter and say, look, I think this deal is going to, I have to take a step back from this. But he violated so many things. You're actually just putting that carrot out there for the SEC. If he was indeed going to be backing out of this deal, he would have to file with the Securities and Exchange Commission. Yeah. And now that he even did this, the SEC is going to be involved. But what's your take there, Toby? Do you think this deal is actually going to happen?
No, absolutely not. And three reasons why. Number one, again, I was an old private equity guy. The debt, it doesn't work. If you borrowed the amount of money they would have to borrow to close that deal, the yield on it, they wouldn't be able to cover, number one. Number two, remember, his loan is backed up by the Tesla stock. But the Tesla stock's down 25% from where he did that deal. So he can't borrow enough, and then he can't sell enough Tesla. So this is what, we call in the private equity business, hey, Todd, this dog won't hunt. You know what I'm saying? And we knew that because of the price disparity on the $54 buyout, and the thing was trading for $48, right? So the smart money, Stevie Wonder could do the math on this. It does not add up, and that's the issue.
And Goldman Sachs actually came out with a real value for this company at $30 a share. At $30 a share. So yes, right now we're creeping back to that level, obviously. But you're absolutely right. At $54 a share, very expensive for this company. And he tried to back out of it a little bit today, saying no, he's still committed to the deal. But I mean, you can't be going back and forth like this. And plus, his words, to be able to move the markets with billions of dollars at stake, it's hard to imagine anybody having that kind of power. I know you have a lot of power like that, Toby.
Only Elon. I guarantee the next tweet is going to be, oh yeah, I sort of effed up, hashtag lost the deal, hashtag what was I thinking, he's a crazy genius. But in this case, I mean, then the other thing I loved about the fact that he said, well, we're going to cut out like 30% of the advertising, and therefore the revenue stream is going to go down 30%. It didn't have a high revenue stream relative to Facebook or any other social media, TikTok for crying out loud. So, and then if I'm Larry Ellison and I'm some of these, right-wing multi-billionaires, I'm coming in, just to raise the flag for humanity. Sorry, pal, ain't going to happen. Ain't going to happen.
Yeah, well, we'll have to see. We'll have to see. Look, either way, it's going to end up closing very soon. But we'll see whatever happens.
No, it's not. It's not going to close.
All right. Listen, great conversation. Coming up after the break, we're going to be talking about the economics of the NFL. The NFL schedule just dropped yesterday. We're going to get into that, and we're also going to talk about the crypto crash. Come back, my friends. You're going to love it.
Buy, Hold, Sell Live, brought to you by Transformity Research.
Hey friends, investor friends, this is Tobin Smith. I just show this if you may remember me from my 25 years on business TV, but it's not about me, brothers and sisters. It is about this. We are about 5 times the average, stock average, over the last 2 years. But more importantly, this year, we're up about 67% in our portfolios, while the S&P is down, 12% and going deeper. And the Nasdaq's down 25% and going deeper. Let me ask you this. Are you tired of losing money? Because right now, we forecast not only a big recession in 2023, but we think we can do this again. We think it could be up again another 50 to 60% by being in the right place, the right stocks, and at the right time. That's what we're doing right now. So join us, transformityresearch.com. Get on our free newsletter, transformityresearch.com. Join us for free and stop losing money.
If you like Buy, Hold, Sell Live, be sure to smash the like button.
Lights, cameras, connectivity to every kind of screen, with 6 broadcast studios and experts ready to help plan the event. Big Wig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences. Let's get started.
change subjects. All right. Ready to go?
Go.
All right, I'm
Toby.
I'm sorry. I was on a time delay. Okay, look at NFL economics. I don't quite understand this, Todd. I know that we're going to start the NFL. I know that Tom Brady, after he leaves, is going to Fox for $350 million. Not bad money.
Big time money. Big money.
But you tell me, what is? Why should I care about NFL economics? Those rich guys are just getting richer, right?
They really are, but I got to tell you, the entire league is just continuing to grow, and it's actually only growing about a 6% clip right now. But the total value of the NFL is about $15.25 billion. Roger Goodell came out and said, in just a few years, in 2027, he's expecting it to be valued at $25 billion. This is a monster. Remember, this is just the value of the NFL, not the individual teams. So last night, we just had the drop of the NFL schedule. Our viewers are writing saying, hey, are you guys going to be talking about sports in the NFL? What better time than to go into it and really get into those numbers? Because it is a big time thing. It's in our DNA as Americans. It's never going to escape it. And it's only going to continue the value's only going to continue to go up. It's incredible.
Well, the way to invest in it, I mean, part of the thing is that live sports still is the number one, linear television bit because you want to see it live, right? Who's going to watch a game 2 hours late, right? So, number one. Number two, because those eyeballs are so valuable, they have the advertisers that will stay with it. But I wish there was a direct way. In other words, you can buy News Corp, and they own Fox, and Fox has an NFL deal. And now you can own Paramount, and they own CBS. Et cetera, and you can own Comcast on NBC, but they're not direct plays. I'm in the baseball world. There's a public company that owns a freaking Atlanta Braves. Why don't we have a public company that owns the LA Rams?
The Green Bay Packers. You can do that. You could actually buy stock in the Packers. But here's the thing. Amazon. They're actually going to be controlling the Thursday night games. They got Kirk Herbstreit. They got Al Michaels from, you remember, Lake Placid, 1980. They got the whole thing going on. They're investing that kind of money. So, if you're looking for a way to actually take advantage of it as an investor and that kind of value, and like what you just said, the advertising revenue alone is worth billions of dollars to a company like Amazon.
Why am I going to buy a $1.8 trillion Amazon who's going to make about $5 million off of the football thing, Todd? I think you're smoking something over there.
It's starting really now, though.
Yeah, but Todd, it's a minor thing. Amazon has 24 different major businesses, all over $1 billion. Their streaming is not going to be worth diddly squat, and Amazon has other real problems.
Okay, take a look at it this way.
Their costs are up 25%.
Take a look at it this way, though. When you have a company like that that's actually going to be introducing a major sport on the streaming side, it just goes to show you how valuable the streaming companies really are. This show is being streamed. You're going to have all the shows that we produce are going to be streamed. And that's only going to get bigger, that kind of market. That's why you have companies like Roku, 60+ million subscribers. Forget about the Netflix story. You have some other companies out there that are thriving. So, if you want to look at the baseline boost in all this, and we're talking about economics of one sport, you have to only imagine going forward, all those streaming companies are only going to do much better going down the line.
All right. Well, I'll tell you what, I will say Roku, now that it's down 80%, is starting to look attractive, and they are going to have some live sports for sure.
Right.
For sure.
No doubt about that. No doubt about it. No doubt about it.
Okay. All right. None of NFL. I know you're excited. Let's talk about the crypto crash.
Go Ravens, by the way. Go Ravens.
Go Ravens. God almighty. You are such a Baltimore. It's unbelievable. So I liked it when Johnny Unitas was there, okay?
All right.
I will say this about the crypto crash. I love the idea of an algorithmic cryptocurrency, right? Because they came up with this idea that you could create a stable coin, and the stable coin didn't have to be backed by dollars. It was just simply going to be regulated by an algorithm. What could go wrong with that, Todd? Now, I remember back to Bernie Madoff, when it turned out that he was $55 billion short of money. Oops, where did it go? Today, the Terra stablecoin yesterday dropped $55 billion. $55 billion. So what does that tell us? What does it tell us?
Listen.
First off, if you're in our audience and you're buying crypto, you have to understand that there's only 16,000 cryptocurrencies now in the world, and about 8 of them have some actual value. In other words, there's a value proposition. Tether, which actually is $1 yesterday and is $1 today, has actual dollars or treasury bills, et cetera, underneath it. So if you're trading, you're using it as a method of payment. Tether works. It's because it's backed up. But you're going to see this is just the beginning. Remember, when you have a crash like this, Todd, you know there's a big problem underneath the surface. You know that there's probably another 500 of these crazy things that have blown up too, because remember, when you lose $55 billion, people are going to have to sell some other stuff to actually try to. Go ahead.
Let's talk about the numbers here real quick. You had overall the entire value of all the cryptos was 2.7 trillion. Guess what it is now? I'm sorry, 2.7 billion. It's now $1.2 billion, and you have less
it was
than half.
Trillion.
Oh, it was trillion,
my friend.
And then my mistake. And I got to tell you, if that's the case going forward, you have to start looking at also the exchanges. Coinbase right now, they're getting hammered with lawsuits. The stock alone is down 80% since its IPO. This is a disaster in the making. And how can the CEO of Coinbase come out and say, if we file bankruptcy, then you're going to have the people that have these accounts, their accounts could be at risk. That would be like Charlie Schwab going under and saying, oh, yeah, we're going to liquidate your holdings. You can't do that stuff. Where's Washington, D.C. right now? The regulators are going to be hammering right now these types of cryptos.
No. This is like throwing 5 red flags. But I do like the fact that CEO Brian Armstrong sold $850 million of his shares in November of last year. I mean, I'm sure he didn't see anything. But let's look at the other side of this. We're going to have more regulation, but people fail to understand, who don't understand crypto, which is probably everybody other than about 100,000 people, is that crypto really is a religion cult hypnotic thing. When you talk to people about Bitcoin, they talk about it and they're called themselves maximalists. This is like monetizing the Church of Scientology, Todd. They believe so much in this thing, and that it's going. But if you're the average investor, please stay away.
Yeah, don't go. Stay away. All right, great. Well, coming up after the break, Toby, that was a great discussion on crypto. We're going to be talking about the markets. We're going to talk about what investors should be looking at as far as economic reports and stocks coming up next week. Stay with us.
Buy, hold, sell, brought to you by Crosscheck Management. Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Financial News TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember. Oh, God. Yeah, I want you to, oh, my God. Fast-paced, sorry.
Take one.
Fast-paced, no holds barred, in-your-face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.
Track, cue, dissolve.
Good morning and welcome
from Bigwig Studios. From the Bigwig Media Studio.
Bigwig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences.
Kudos to our team who's running around behind the cameras.
What I liked about working with Bigwig Media was you guys are the experts.
Our industry pros have you covered. Let's get started.
Welcome back to BHS Live. I'm Todd Schoenberger. I'm in beautiful downtown Buffalo today, and I'm joined by my co-host, Tobin Smith. He's in sunny Scottsdale, Arizona.
Is that an oxymoron?
Can you believe it actually stopped snowing here? It's actually been a beautiful week. It's Chamber of Commerce weather for the first time in, I don't know, since August. So we'll take it while we can, right? But
show us your tan, Todd. Show us your tan.
Yeah. Yeah, right. I know. I still need a few more weeks for that. But listen, right now we have a Dow, we have a market that's actually rallying. We're doing risk appetite is back in the market. We have a lot of investor cash flow that's coming in. That's great back in equities. Bonds are down. That's another big positive sign. Will it stick? I don't think it will, but that's going into next week. But we have so many big things that are happening next week, Toby. You have retail sales out on Tuesday. Obviously, with jobless claims coming up, we have housing starts on Wednesday. So many big economic reports that can actually move the needle. But then I start looking at some of these individual companies that we still have to see 25% of the S&P 500 report their quarterly earnings. You have some big names that are still out there. But going forward, I got to say, I know you like it. I love the oil industry right now. If I'm an investor and I'm looking to buy, at least in this weakness that's currently taking place in the markets, I have to start looking at Exxon, Chevron, ConocoPhillips as the big three.
Well, you took 2 minutes to get to buy Exxon? Holy mackerel, that's fantastic.
Right.
Whatever's coming in next week and data, nobody should obsess about it. There's only two statistics that really make a difference. We have 11 million people looking for work in the United States. 11.5 million jobs available and only 5.5 million people. The Fed could raise rates high enough to kill 5 million jobs, and we would still be at full employment. And so regardless of what we see next week, that's number one. Number two, if you look at all the fixed inflation issues, the only way they come down is if negative growth, not slow growth, not slowing growth, but negative growth. And when we have negative growth, the energy stocks are going to take it on the chin. Now, we're 80% long, commodities, energy, everything else. But we are certainly starting to hedge ourselves out in the future. But for the next 6 months, Todd, you're absolutely right. I'm just saying is that if you really want some action in this, first off, I'd be buying Occidental Petroleum because Oxy has Uncle Warren Buffett now owning about 11%, right? And he'll move it up to 19.9. I guarantee you that. They have one of the lowest costs for bringing oil out of the ground. And then the other thing you need to know about oil is that we could launch 1,000 drilling rigs tomorrow and drill all day long, and we're not going to get an ounce of oil or natural gas out for the next year, probably a year and 2 months. But more importantly, we don't have enough steel to put down those pipes, so we can't do it. We don't have enough people. We don't even have enough sand to frack those wells. So, I'm sorry, my friend. I mean, it's
Toby,
great to own oil, and I'm going to be owning it.
I want to give you a tool belt. You get out there, okay? I want you out there. I want you to start putting out that steel in the pipelines and get this oil out to the coast.
Todd, you know why they don't have any workers? Because if you've ever been in Texas in summer with 110 degrees and 50% humidity, or that's right, you have, or for the same $22 an hour, you can go to Amazon, work in a warehouse in an air conditioner, have regular hours. Don't be camping out in the middle of Bufu nowhere, Texas, while you have to be out there 6 days a week. So that's the other reason. Those guys are not going back unless you pay them $40 an hour. And you couldn't pay me $4,000 an hour to be a derrick hand in the middle of Texas in the summertime. There's numbers coming out here, but I will tell you that energy, because we're de-Russifying the Western world. We're the biggest exporters of oil.
Love that word.
All right?
Love it.
So
love it. Well,
the de-Russifying is going to keep it high. Go ahead.
I love it. And I got to tell all the viewers, because at 4:15 today, we are with Buy, Hold, Sell Live. We got not only Jeffrey Hirsch, who's editor-in-chief of the Stock Traders Almanac, who's going to be joining us today, but we also have Fernando Valle, who's the senior oil and gas analyst from Bloomberg. He's going to be joining us for that block where we're going to, he is great. And he's got all kinds of things to say. You won't believe what he's going to say about oil, though, going forward. I talked to him yesterday at length. He's got so much to say about it. He's got a lot of insight. Definitely want the viewers to stick around about that. But what do you think next week? So let's switch topics real quick while we have a couple of minutes here. You still got the markets that are rallying going into the weekend. It's a feel-good day. We still have another down week, though. We were down so much. Even with the 500 points on the Dow, it's not going to really do much for us. So we have this big sell. We haven't had this kind of a sell-off in the markets for a decade right now. And now I have to wonder, going forward, you got a big retail sales number on Tuesday. It's really going to show what the U.S. consumer is doing. Do you think this number is going to be a beat? Do you feel positive, or are you just going to stay pessimistic?
No. I mean, remember, Todd, 66% of American households live paycheck to paycheck, and they have about $400 of cash. When they got the stimulation checks, finally, oh, my God, they had money in the bank, and they bought stuff, right? They weren't buying services. We're a 70% service economy. That's completely flipped now. And now, because of the higher prices, they're stopping. Credit card balances went up $55 billion in April. It's one of the highest ever. Why? Because households that have $400 of cash in a bank are using their credit cards to buy food, to buy gas, etc.
Right.
They're not buying discretionary. At the high end, all of us people with discretionary income, how much more can I buy? There's nothing else I can fit in my house. Now, all I want to do is get on a jet and go to Venice, Italy, or I want to go to, Thailand, etc. So travel is going at the discretionary. But for the consumer, which is 70% of the U.S. economy, at the margin, we're slowing down. And the big worry for the stock market, particularly for cyclical stocks, is the consumer spend. We already understand that 80% down stocks that benefited from the pandemic up are now 80% down, right? Because you've done everything you can. So you're going to see slowing. You have to take gas prices out of retail sales. That's the number you want to look at. And number one. And then number two, when you look at, they're going to bring out credit card numbers. If people are putting their lifestyles on a credit card, that's not a good thing.
Yeah, I have to agree with you right there, Toby. All right, well, going into the close right now, Dow's up 1.3%. NASDAQ's up 3.6%. A wonderful day, and I hope you stick with us at 4:15. We got Fernando Valley's going to be joining us, talk oil, and we also have Jeffrey Hirsch from the Stock Traders Almanac. Veronica's on set. I hear she's in the studio. She had a hellish way of getting into D.C. today. Really feel for her, but it's going to be a great show at 4:15. For those that are cutting out right now, enjoy the weekend. We hope to see you next week, and enjoy the NCAA men's lacrosse tournament. It's going to be a good one. Go Maryland, baby.
Oh, yeah.